The Cannabis Investor Spotlight Series is sponsored by Integrated CBD, an institutional-grade supplier of organically grown hemp and hemp-derived CBD. Integrated CBD's 10,000 acres of drip-irrigated farmland in Arizona allows for sustainable year-round growing. Combine that with their USDA organic certification and their 154,000 square foot extraction facility, and Integrated CBD is able to deliver unmatched uniformity and consistency that scales with your phytocannabinoid needs. Integrated CBD then goes even further, providing complete transparency into their products by tracking and tracing their CBD from seed to lab to bottles through an exclusive partnership with Verified Organic, a blockchain solution that records and verifies each step of the organic production. To learn how Integrated CBD's vertically integrated, single origin, fully transparent solution scales to meet your company's hemp and CBD needs, visit integrated-cbd.com. Mention that you heard it on this podcast and receive 5% off your first year orders. Terms and conditions apply. That's integrated-cbd.com to receive 5% off all your first year orders. Integrated CBD, the certified USDA organic, fully traceable hemp-derived phytocannabinoid solution that delivers at institutional scale.
The long view is we're going to put in money if they're doing well, second and third round after the first. So it's an easy investment, these follow-on rounds. If you've been with the company, you've seen the progress, you know, compared to other competitors, if they're doing well, and very easy to follow on and very easy for the management team not to handle the distraction of going out and finding tons of new investors and not running their business.
From MJBulls Media, it's the Raising Cannabis Capital Show. I'm Dan Humiston, and on today's show, what are the next big cannabis business and investment opportunities? Top cannabis investors share their 2020 investment strategies. Today on Raising Cannabis Capital, we are continuing this month's Cannabis Investor Spotlight Series with Steve Schuman, the founder and managing director of Halley Venture Partners. Steve, welcome back to the show.
Hey, how are you?
I'm great. I've always loved your name. I think the symbolism of Halley's Comet coming around every 75 years and an industry like cannabis coming around like once in a lifetime, it's
Yeah.
It's spot on. It's a great name.
Certainly came up when we started thinking about what we stand for. And I just remember seeing a comment when I was about 14 and thought, what am I going to do in the next 75 years before it rolls around again?
When is it coming around again?
2061.
Oh, boy.
It's plus or minus a year, so depending on what else is floating around in space.
Oh, man. I'm a 63 baby.
You never know.
Yeah. Oh, yeah.
Technologies we're investing in will extend our lives.
I will be there. That's a motivation to be there.
There you go.
So much has happened in the industry since the last time you were on. But before we jump in the industry,
Sure.
Let's take a quick update as to what's gone on at Halley.
Yeah, so quite expanded quite a bit, brought in a significant amount of capital. We've got 6 names so far in the portfolio. Most of those have had follow-on rounds as well, and brought on a new general partner as well to help me out and built out the team. So It's been a very busy year.
Talk about the follow-on rounds. We hear this occasionally. Nothing perks up of an investor's ear more than when they say a year later, one of their portfolio company just does another raise.
It's one of the basic tenets we have in our investing style is that we want to get involved with companies early. Once you write them a small check, they are a little frustrated because we do a lot of due diligence for an early stage deal. But the long view is we're going to put in money if they're doing well, second and third round after the first. So it's an easy investment, these follow-on rounds. If you've been with the company, you've seen the progress, you know, compared to other competitors, if they're doing well, and very easy to follow on and very easy for the management team not to handle the distraction of going out and finding tons of new investors and not running their business.
Yeah, I see a lot of the deals that you've done sort of in a syndicate. Sometimes you roll in with other groups that you've worked with in the past. Has that been a pretty successful strategy?
Oh, it's been very important for us. When we got into the industry, kept investing heavily 3 years ago, but looking at it 5, it was tough to find other investors that we could trust and feel comfortable that they're in the deal with us. They just weren't that sophisticated. Now we've got some great other funds out there that we work with really well. We share our due diligence, and it's typically not official syndicates, but sort of club of 4 or 5 of us that tend to invest together greatly helps the process. You know, you're going to get good people on the board and push the company forward as opposed to backwards.
Well, and also it helps with those next rounds. If you already have your team in place, your investment team in place, it's like, okay, next round, guys, we're in. Yep, we're in.
It's tough to convince new investors when you've taken out the whole round before. It just seems like too self-serving. So you want to spread that risk around and bring in more people into the tent.
Yeah. So recent investments, what are some of the companies that you've recently jumped on?
Yeah, we've done most of our investments upstream so far. So a lot of ag tech, laboratory technologies, and we're kind of finishing that out. Our last new investment was Willow Industries. They use ozone, which is basically oxygen, to decontaminate and clean up flower. So they've been extremely successful. They're out there in most of the big grows these days and adding more every day. They can't build enough machines. We feel great. They're a steward of the industry, helping clean up the mold and everything else that occurs on plants, and off they go.
Wow. That's a tough problem to have when you can't keep up with the demand.
We're looking for people to finance their equipment so they don't have to use equity.
I'd like to take a quick break to thank one of our sponsors, Creating Better Days, and their line of high-quality CBD products. The benefits of including CBD into your wellness lifestyle are well documented, but with so many brands, it's hard to know which one to trust. Creating Better Days' manufacturing process includes an additional step that includes nano-emulsification technology, making their products more effective, faster absorbent, and more potent. And with the transparency of specific QR codes and lot numbers on each package, you can be confident that you always receive the highest quality CBD from U.S.-grown hemp. To learn more about Creating Better Days' high-quality CBD products and to receive 20% off today's order, go to creatingbetterdays.com and use coupon code RAISING at checkout. That's creatingbetterdays.com, coupon code RAISING at checkout. Creating Better Days. Trusted, high-quality hemp CBD products. Before we started taping, you were mentioning to me just how many deals get submitted to your website every day. It's mind-boggling. Share that with our listeners.
Yeah, I just checked. We had 1,463 inbound deals on our site here just in the past year. And that doesn't include another couple hundred at least that are sent in from our networks and other channels.
Wow. Well, what are some of the key differentiators that move one of those 1,400 to the top of the pile?
Yeah, it's 4 or 5 different bullet points for us. One, we like management teams that were successful in their sub-industry, maybe outside of the cannabis industry. And so Bring Big was a great example. The team had built loyalty software companies before, and they built one for the cannabis industry, and now they pretty much own the market. We like companies that can survive legalization and survive a crackdown, for that matter. There's a lot of great companies, great solutions, because the product's still semi-illegal. But once it does open up, they may not be so useful anymore. And so we try to avoid those deals. They could have a great business, and then 2 years from now or 3 years from now, it goes to zero with too much competition. So
yeah, that's a risk with a lot of the companies that are the giant companies that are sitting on the sidelines. When they come in most cases, the only option is to have them buy out. Otherwise, some of these companies won't be able to compete.
Yeah, we're very concerned about that longer term. You can't perfectly invest and hope that there won't be any competition down the road. But for us, technology is usually a differentiating factor. So we look for companies with defendable tech. They have patents and they're defendable. They'll have an advantage even when it does open up.
See, it's good advice. That's good advice. You recently opened up your second fund. Is that going to be just for accredited investors?
Yeah, both of our funds are private funds for accredited only.
Okay. And that second fund, is it open now or is it about to be open?
No, it's open. We've got 4 investments already, so we're off and running.
Oh, my gosh. No, I don't know why I thought you were preparing to open that, but wow. Well, I guess with 1,500 deals, you gotta keep up with the deal flow. My goodness.
Yeah, it's been crazy. Really ramped up the team here recently. We brought on some informal advisors to be formal advisors. I brought on a full general partner to help me with everything. So we've really ramped up, built out the back office and the investment team. So we're really off and running at this point. You
have a reputation of doing very, very thorough due diligence.
Yeah.
It's time consuming. You can't mail that in. It's time consuming, and somebody's got to do it. Without the bandwidth necessary to deal through 1,500 deals.
Yeah, there's no shortcuts here. There's a lot of claims made by companies. You've got to go through them individually. And we have a policy where we're going to do due diligence until we're satisfied. And if the round closes and someone else takes it, then it happens. And it's happened before. And, we don't look back. The best way to make money is not to lose it.
Yeah. Well, we've been speaking with Steve Schuman from Halley Venture Partners, and all of his contact information, including their website, which is halleyvp.com, will be on the MJBulls website. Steve, it's always good to have you on the show. I really appreciate you joining us again, and hopefully you'll be available next year or maybe sooner.
Absolutely. We'll talk a year from now, and maybe we'll have another 1,500 deals to go through.
Oh, the rate you're going, it'll be 15,000 deals. Oh, boy.
There you go.
Well, good luck with this.
Thanks a lot.
Let's stay in touch. Today's show was made possible by the generous support of our sponsors, like Helix TCS, the leading provider of critical infrastructure services to the legal cannabis industry. Recently, Helix's president of data services and former New York Stock Exchange executive Garvis Toller was a guest on the show to discuss cannabis capital markets and how savvy businesses and investors are capitalizing on the recent downturn. Tune into episode 152 to learn more. Today's podcast was produced by MJBulls Media, the industry's premier cannabis podcast network, with original music produced in part by Jamie Humiston. I'm Dan Humiston, and you've been listening to the Raising Cannabis Capital podcast.